before, if you want me to answer your questions first, then just submit them. Just log in at the blackstockmarketprogram.com, and you can actually submit your question in advance, and I will answer your specific question. I will use your name and answer your question about your specific situation directly. With that said, those of you that are inside the Zoom, I'll get to your questions after that. Put them in the Q&A section so I can see them. If you put them in the chat area, I may or may not see them. But if you put them in the Q&A, then I will definitely get them. Okay, so first of all, let me ask everybody who's making money this week, who's doing well in the market. I know that this is a tough market if you have a lot of tech stocks. If you have a lot of long-term growth tech stocks, like maybe small electric vehicle companies, even some of the cannabis companies, which aren't necessarily tech stocks, but they are growth stocks. You might have got hammered a little bit. Let me know how your portfolios are doing. I'm in the red for like 2 weeks now. Yeah, it says Marquise. Yeah, well, Marquise, there's a good chance what's probably going on is you have a lot of very risky assets. And the thing about risk is that risk can go up and it can go down. So if you have, say, a bunch of stocks that are small companies that haven't made a lot of money yet, where the best days are in front of them, it's almost like betting on a newborn baby to go become, to win the NBA championship one day. Like that's a long-term bet. That's a lot different from, betting on Steph Curry, who's already in the NBA, who's a full-grown man. So an Apple or a Google might be like a Steph Curry, right? Whereas, a company like Workhorse or Tilray or some of these other small companies we've talked about, in this class, those are more like a baby Steph Curry, right? A baby that you think might possibly become the next Steph Curry, but any little thing can change everything, right? So when you're pricing stuff long term, what happens is that when you have any little suspicion, any doubt from the market, any fears or about inflation, which is the big culprit right now, it's not even real inflation that's causing the problems. It's the possibility of inflation, right? So the market's kind of a funny thing. It's I watch Star Trek and stuff, and the stock market is interesting to me because it's a financial time machine, and it's also a multidimensional kind of thing. Like you're living in multiple dimensions, meaning that you're not just dealing with reality, you're dealing with all the possible realities that might possibly come up, right? And all that's being factored into the stock price. That's kind of crazy. Also, you're not just dealing with today, you're dealing with the next 20 years. You're trying to estimate, which electric vehicle company is going to be the most dominant in the year 2040. Well, here's the deal. The reality is that even though you have to take a guess, you're gonna get it wrong. It's like I've been playing Call of Duty with my son every day on my Twitch channel, which is Dr. Boyce Watkins. Just look it up, and we play Call of Duty and we talk about stocks and stuff like that. So it's like a good chance for us to bond. And the thing about Call of Duty is really funny is there'll be times where you basically it's like this terrible game where you're like murdering people the entire time, right? But it's fun which makes me a weirdo, I guess. And there are times where you got to take a shot from very far away. You have to pull out your sniper pistol and shoot a guy who's half a mile across the entire map. You're probably going to miss that shot, but you got to take the shot, right? You might hit it, and you can't miss it. You can't like not try, right? So the thing is about investing, it's the same way. Some companies are easier to price than others. Some companies are making money right now. They have assets right now. You can look at what they've got going on right now. Apple can tell you, like, look, yeah, we're going to do great things in the year 2030. Sure, absolutely. But don't worry about that. Let us tell you about the new iPhone that's coming out in 2 weeks, right? And then that becomes heavily factored into the price. That makes sense. Whereas a small company, a Freya or Tilray or something, in cannabis, for example, they're going to be like, well, most of the money that we're going to make isn't even real yet because governments still have to change the laws around marijuana. Once they do that, woo, the whole world's going to blow up. Or electric vehicles, well, yeah, there aren't that many charging stations around the country, and not that many people drive electric vehicles, and we aren't making that much money. But woo, if this happens and this happens and this happens and this happens and this happens, boom, we're gonna take over. We're gonna take over, right? And so the reason that you participate in that is because they might do that. They might really take over. They might really become the dominant force that you expect. But then chances are that they won't. It's like that sniper shot across the field in Call of Duty. I got to take the shot, but I probably won't hit it, right? But I got to take it just in case I do. So what can occur, and if you think about this again, think about that analogy with the long sniper shot. If any little thing goes wrong, if I twitch the wrong way, if the wind blows a little too hard, or if the person moves a tiny little microscopic inch, I'm gonna miss the shot, and I might miss it by a lot. Whereas if I'm playing the game and I'm right up in someone's face and I've got an AK-47 and they're 2 feet away, then it's much easier for me. I have a big margin of error. I can just right, and I may miss them 18 times, but if I hit them 3 times, then they're dead. Right. So pricing the stock is the same way. Some stocks are easy to price, some are very difficult to price. The stocks that are very difficult to price are the ones that are getting body slammed right now because you're reacting not just to what is actually occurring, you're reacting to all the possibilities of all the things that might occur if things go wrong. Everybody is afraid of inflation. Jay Powell, the chairman of the Fed, has basically said inflation is not going to be a problem. It's not going to be a big deal. So if he's right, then you're going to be happy, because if you've been buying these stocks and buying the dip, which I just tend to do, I just like to buy the dip, then these stocks are going to resurrect and start doing really great once everybody realizes that all their fears are gone. But until that time, you've got almost like a type of economic terrorism that's taking place. Terrorism is when you don't really have to do anything bad in terrorism. You don't have to necessarily hurt a lot of people. You just got to scare people and make them think that something bad could happen, right? So, for example, there are people, I saw a theory where they were talking about the whole pandemic, and they claimed that this could be. I'd like to listen to all the theories, taking all the information. So their theory was that China was engaged in a type of biological terrorism, that in order to claim economic dominance. So their argument is, look, if you just put a little virus out there that kills 0.1% of the population, then the other 99.9% are going to be so frozen in fear that they're not going to do anything. That means your economy is going to shut down, your military is going to shut down, your defenses are going to be shut down, and it's going to give them an opportunity to make moves. Well, the country that actually did the best during the pandemic, that was actually able to solve a lot of problems and make a lot of money, was actually China. Before the pandemic, China could not control Hong Kong. Hong Kong was out of control. There was 5 million people out in the streets protesting every day. They couldn't control millions of people. But when the pandemic hit, they then were able to pass a law that says if you congregate in groups of 2 or more, then we can arrest you. So then during the pandemic, they said, so for your safety, we're going to start arresting all the political leaders who are telling people to gather in large crowds. And now they're changing all the laws in Hong Kong. Now Hong Kong will never be the same again. So my point is to say that that right now in the markets, the financial markets, you're dealing with what I would almost consider to be a type of terrorism. Fear is a form of terrorism. Whether you're talking about economics or even in your own life, if you live your life based on fear and you're always scared to do things because of fear, and you're always worried about the bad things that could happen, then you're going to be so frozen that you're never going to make any progress. So that's that Uncle Boyce piece I'm throwing in there just as a bonus, but in general, that's what's happening. These prices are dropping because there's this fear of inflation, and so so what am I doing with the stocks that I have in that category? I'm just holding tight, and the reason that you spread your money out is because you want to have those other investments that you have. You got your crypto, you've got your blue chip stocks, your big companies, your Apples and Google and gosh, I'm trying to think of blue chips companies that are not in tech, because it seems like all the giants are in technology now. But maybe Procter and Gamble and things like that will then back up and allow you to get access to cash if you need it, because some of you may own some of these stocks on margin. If you own these stocks on margin and the price is dropping, you're going to keep getting margin calls. And a margin call is when the bank basically says, either give us some cash or you got to sell some stock. And the worst time to sell is when the price is down. So a lot of times you want to keep cash on the side so you can put the cash into your account. So you can say, look, just hold on. Let's wait it out. Because usually in investing, time is the factor that makes everything okay. If you wait it out, usually if you wait out the storm on your portfolio, your portfolio will usually recover. Okay, so I'm going to answer some of your questions now that you submitted. And like I said, if you want to see the stocks I'm buying this week and stuff like that, just log in at the blackstockmarketprogram.com and you can take a look at everything I bought and all the things that I'm doing right now in response to what's going on. Okay, so let's see here. Javard Hoskins says, Dr. Watkins, I've been receiving dividends from some of my investments that I have with Stash. My question is, how is the amount of dividends you get determined? That's a good question, Javard. Basically, there's something that they call a dividend yield. A dividend yield is basically the percentage of the stock price that the company plans to pay in a dividend. Now, most of the time, companies do not have to pay dividends to you. They can choose to not pay that if they want to. Dividends are usually not going to be a lot of money. It's hard to live off of dividend income. It just really is. I'm not a fan of it. I get dividends, but it doesn't. Dividends don't pay no bills up in this house. You know what pays bills in the house is revenue from business or selling stock options. You know, things like that. Or sometimes just selling assets or whatever, or generating income through either labor or the use of the capital that I own, or rental property, things like that. Dividends are like, oh, that's sweet. Oh, you know, AT&T sent me $1.35 or $8 this month. Yeah, I don't that ain't gonna change your life. But so don't get too caught up in the whole idea of dividends. But actually a more thorough way. You guys know I like to be thorough in terms of making sure you understand what's going on. The reason dividends exist is because when you're a shareholder in the company, that their money is your money. Like that, when they're making money, that's your money, right? And what basically the CEO in the management of the company is they work for you. They are managing your money and getting a return on your money on your behalf. So the rule is basically that that they should hold on to the money and make investments with your money and get a return on your money as long as there are good investment opportunities out there. But once the investment opportunities dry up and they can't get a good return on your money anymore, they're supposed to give it back to you. That's what a dividend is. A dividend is basically the company's managers giving money back to the shareholders, saying, look, we don't have any good use for this cash. So we got an extra billion sitting on the books. We're going to distribute this to all the shareholders so you can go take that money and invest it elsewhere and make it grow in some other way. Companies that tend to pay dividends tend to be mature companies that don't have as many investment opportunities. Young companies that are trying to grow, that have lots of investment opportunities, do not tend to pay dividends because they're trying to keep every penny that they can get so they can keep making moves. Right? Money allows you to make moves, just like in your personal life. Anybody ever felt that, where you feel like you can't make moves because you don't have enough money? Well, the same thing is true with companies. When they have enough money, they can make moves. When you don't have enough money, you can't make moves. All these great opportunities are running by you, and you can't take advantage of them because you don't have the resources necessary to make that investment. So, in fact, you guys know what poor stands for. The word poor. I taught you guys about this. The word poor stands for passing over opportunities repeatedly. So, a lot of the way to stay poor is when people have one opportunity after another flying by, and they either don't have the resources or don't have the willpower to go take advantage of those opportunities. So companies that don't have enough cash are poor. A company that is cash poor is typically going to be growth poor and opportunity poor. Okay, because it takes money at that level for you to grow. But companies that are not trying to grow anymore or don't have as many growth opportunities will pay a dividend because they're like, look, we don't need the money anymore. It's better in your hands, right? That's what they're supposed to do. They don't always do that, though. There's something in finance that I studied when I was in graduate school called the free cash flow theory. And what the free cash flow theory basically says is that companies that start making lots of money and making a big profit and have all this extra cash, they tend to waste the money. So they'll say, yeah, we could pay a dividend, but maybe we can upgrade our fleet of private jets so that the executives can have a better lifestyle. So that's why you have shareholder governance, what they call governance by the shareholders and the board of directors. The board of directors represents the shareholders, right? And the board of directors watches the management to say, hold up, wait. You had this extra money and you spent it on a fleet of private jets. That's not cool. We want a dividend. Pay us a dividend because either you need to you remember you're little and they say the shit to get off the pot, right? So either use that money and make something happen, or let us have the money, right? So that's what a dividend is. That's what it represents. So if you're looking for dividend paying stocks, you're not going to get a lot of growth. You're not going to get a lot of capital gains typically out of dividend paying stocks, meaning that the stock price is going to remain pretty stable. These are typically going to be big companies that are very, very profitable. Small growth companies, not only do they usually not want to pay a dividend, but a lot of times they don't even want to be profitable. A lot of people don't even understand that. A lot of people will say, "Oh, so and so is a terrible businessman because he didn't even make a profit." That ain't the goal. Sometimes as a wealthy person, the interesting thing about wealthy people and wealthy businesses is that they ain't trying to impress you with a profit. Wealthy people, who they know they got money, they don't need your validation at that point. They're not trying to prove to you that they have money. So a lot of times they deliberately avoid making a profit so they can minimize their tax bill, or they'll take all the money. They'll say, damn, we have $1 billion in profit. What can we do with this money so that we don't have a profit? They'll say, oh, let's buy a few new buildings and expand our company. Okay, let's put the money in, let's make these investments, and that way we can write it off and the accountants can make sure we don't have a profit. Stop thinking that only the only good businesses are profitable businesses. Stop believing that. In fact, when you start your businesses, there are going to be years where you have losses, but I guarantee you, if you got a good business that's generating good revenue and good cash flow, you're going to be living good even if you don't make a profit. I'm telling you. So don't look at it the way a person with a job looks at it. A person with a job, if your income is lower than your expenses, then you're in trouble, right? It's hard to overcome that. Companies do it all the time, and they do it deliberately because the tax laws are set to benefit people that make investments and stuff like that. That's why you want to be an investor. That's also why you want to have a business, because you can actually get a lot of write-offs that will allow you to get more out of your income than other people do. All right, so let me see here. The next question is a question from Sean Brown. Sean Brown says, what do the terms consolidation and divergence mean as it pertains to stocks? Okay, so consolidation and divergence are terms in technical analysis. Technical analysis is where you're looking at charts and you're looking at these different boundaries and what I forgot what they call them, resistance points and things like that, to try to understand what the stock is going to do. So divergence, I know if I recall correctly, divergence means you're diverging from a resistance point, basically. Like, oh, the stock's breaking out now, the stock's taking off. And then consolidation is where you're sort of looking at the company's, I guess the parent company, and kind of blending the financials together to converge into one sort of simple model. Let me give you guys a warning about technical analysis and swing trading and day trading and all that. There's a school of thought that says that at least about 90% of that is voodoo. 90% of that is people, it's no different from somebody who says, I have a system where I can beat the horses at the racetrack. And I say 90% because of this. Even the people who claim they can beat the horses at the racetrack, some of them actually can. Right? But it's very rare. Or I think about like psychics. I'll tell you the truth. I believe psychics exist. I believe that there are people that have tapped into some sort of weird energy universe, or weird energy in the universe, where somehow, some way, they were able to tell you in the barbershop when you were 7 that you were going to grow up and become an accountant. I have no idea where that comes from, but I have seen it, and I'm open-minded enough to know how little I know. Like, that's the first thing you need to know. When you become a teacher or a professor like I am, the first step toward knowing that you're intelligent is to know how little you actually know, right? That's when you stop thinking you know everything, because you don't know everything. What you know compared to what you don't know is massive. Like literally the amount that you don't know is literally probably 10,000 times greater than what you do know. So stop thinking you know everything. People who act like they know everything, that right there tells me you don't know anything, because you're a know-it-all. So I don't know where this comes from. I don't understand how it works, but I've seen it. I believe it's possible. It's out there. But here's the deal. There are a whole lot of fake psychics out here. Most psychics that you meet don't have any, ability. There's nothing real about what they're doing, right? And so technical analysis is in that category, in my view. When I was in graduate school, there was a constant debate about whether or not technical analysis works, because really what all you're doing is you're looking at the price of the stock the movements of the price and predicting the future price based on the movements of the past. Um, there are entire theories that have won Nobel Prizes that literally say that's not possible. They've tested the hell out of it to the end of time and found that no, if you for example, if you think that you should buy all the stocks that start with the letter A, or buy all the stocks that have passed their resistance point and all that, that stuff just really doesn't work most of the time. But but what they did find was they did find these little blips, what they call market inefficiencies, where sometimes, yeah, you can actually predict the price a little bit under certain circumstances with some of these little models and tricks. My dissertation was actually on something very basic called momentum and in weekly reversals, and basically that. Typically, if you have a portfolio, now this was not based on individual stocks. This was a portfolio of stocks, meaning like 20 or 30 at a time. And you, if you bought extra every time the stocks went down, that chances are the next week you would have a come up. And then if you sold a little when they went up, then you would make like excess profits, because you were just basically leaning on this idea that when it goes down, it's going to probably go up. When it goes up, it's probably going to go down. That's okay, but you got to be real careful with that, because there's a lot of witchcraft like this kind of being sold out there. And also, you're ignoring the most important driver of a stock price. The most important driver of the price of an individual stock are the fundamentals of that company. Like, what's going on with that company? Like Al was asking, what's going on with AMC? Well, if you want to know what's going on with AMC, you don't look at the charts. You want to read up on the news and the information. Like, what's happened? Did they make a change in their management? Did AMC, did AMC make some sort of decision? Did they go out and sell a bunch of stock? Like, if a company starts selling off their stock and saying, "Ooh, this price is way too high. I'm gonna go ahead and sell this. Let me go ahead and sell while the getting's good." Well, then the price will go down, because investors are like, okay, so you're an insider with the company and you think the price is too high. Well, then I'm gonna go ahead and follow your lead and get rid of my stock too. Elon Musk, when Elon Musk said something on Twitter about Tesla stock, he said, the price seems a bit high. Well, Tesla stock immediately plummeted, because Elon Musk knows more about that company than you do. And if he says the price is high, then the market's like, well, then, oh, well, if he says it's high, then, it's like if the mother says that the child is a terrible person, then I'm gonna believe the mama, right? Because Elon Musk is the mama or the daddy of Tesla, right? So the point is to say that I think you want to just be real careful about all this stuff that's kind of out there, because and in fact, actually, I would say this too. A lot of the people that were claiming to be stock market experts all through last year, they're losing a lot of money right now, because a lot of the companies that they had you buying into, that they really told you, like, see, I told you stock was going to take off. Those companies have crashed. Those companies have plummeted. And it's not because they're necessarily stupid, but it's because risk can go in both directions. And if you're not paying attention to fundamentals, you miss what's actually happening right now. What's happening right now is that there's a fear of inflation that is causing prices to drop. The valuation models of a stock price basically say that when you have a young company that's growing really, really fast, that when there's a little bitty change in expected inflation, that stock price can crash straight to the ground. And the fact that it's crashed straight to the ground does not mean that it's gonna come back up just because it's gone beyond some sort of a band or something that you've established on the chart. No, that stock may crash and never come back. So you have to diversify and be very, very careful when you're investing, because sometimes your stocks catch a cold. Sometimes your stock has pneumonia, and you got to just sort of know the difference. Okay, so next, and then sometimes it has Ebola, and so you just got to know the difference in terms of what's happening. All right, so Picola Brown says, what's the difference between a day gain and a total gain? The difference between the day gain and the total gain is that the day gain is the percentage or the amount of money that you make that day. The total gain is the amount that you made since you bought the stock. Okay, so that tells you like total gain. All right, so next question. Philip writes, would you recommend keeping 3 months of monthly expenses in my bank savings account, then investing the remaining cash I have in my Acorn Stash account instead of letting my cash sit in a low interest savings account? Is that a good idea? Yeah, well, okay. If you're talking about like things like the emergency fund and stuff like that, well, let me just tell you, this one school of thought on that is that having the emergency fund means that you have a bunch of cash that you've set to the side that is just going to sit there, in case of emergency, right? And so the cash isn't going to be working for you. Your money should be working for you, right? You want to make money from the money you have. But when it's sitting in a savings account, it's not gaining any interest. It's not doing anything. It's just sitting there, getting old and dropping in value because of inflation. Not rapidly, but very slowly. It's decaying in value. Um, I personally think that you have to what you want to do is look at the reason you have you guys know me. I like to go to the core so you can really understand what's going on from a fundamental level as opposed to just giving you the simple answer. So why do you have an emergency fund? Well, the reason you have an emergency fund is because things go wrong, right? You're protecting yourself, right? It's a form of economic self-defense. And in fact, there's actually a program I put together on the rules of economic self-defense, which what did I call it? If you go to blackeconomicdefense.com, that's blackeconomicdefense.com. You can actually take a look at that lecture if you want to. I broke it down. It's a series of breakdowns that I do on what economic self-defense looks like and how to protect yourself economically from problems, calamities, things like COVID, stuff like that. So it's blackeconomicdefense.com. Well, that's why you have your cash sitting there. That's why companies keep their cash in case of emergency, because cash will allow you to do a couple of things. One, it protects you, right? So your car breaks down, you need $500 for to fix the car. You got your cash, right? Your stocks start plummeting. You need money to put into your stock account to avoid the margin call. You grab your cash, right? And the thing is, though, it's like basketball or football. First, you play defense, but you don't score points on defense. You don't make progress on defense. After you finish playing defense and you protect the goal, then you play offense. Then you start moving forward, right? So cash also allows you to do the other side of things, right? It allows you to not just avoid tragedies, it also allows you to take advantage of opportunities. So for example, Warren Buffett with Berkshire Hathaway keeps 185. I think the last time I checked, he had $185 billion in cash just sitting there, doing almost nothing, collecting very small amounts of interest, just sitting there posted up, just waiting for something to pop off, just waiting for an emergency or waiting for an opportunity. So why would Warren Buffett sit on $185 billion in cash? Because when there are times of distress, there are companies that go on sale dirt cheap. You can buy property dirt cheap when it's in distress. So, so for example, there are people that get into real estate. They'll buy a house for 30,000, fix it up. Next thing you know, they're selling it for 100K. Or they go after COVID. I told you guys to start buying stock, or I didn't tell you what to do. I don't give you investment advice, but I told you what I was doing. I was buying lots and lots of stock right when COVID hit because the market crashed. And I had my cash just sitting there waiting for me to take advantage of an opportunity. Well, that was the opportunity of a lifetime. There were companies like Red Robin that were trading for $7 a share. Red Robin's now over 40 something dollars a share. So a lot of you started for the first time in your life making an unbelievable amount of money because you were diving in and buying all these really cheap stocks and using your excess cash to do that. So that's why you keep the cash. So the question then becomes, where do you keep the cash while the cash is posted up and waiting for an opportunity? Some people believe you should have it sitting there in a savings account, not gaining any interest. I don't believe that's necessary. I keep my extra cash in my safe stocks. My safe stocks are stocks that are not going to really move a whole lot, but they're going to give me a little bit of growth. I'm going to get a little bit of return. Like, so, for example, if I have a bunch of money in companies like General Mills and excuse me, and Apple and stuff like that, well, Apple's not really going to plummet. Apple's not going to crash as badly as everything else. So if there's something that comes up, I can just sell some of my shares and use that money to go and pay for what I got to pay for. But what is important and what is essential is that anybody who wants to avoid financial tragedy, you have to have resources stacked up somewhere. You have to take a percentage of all the money that you make, maybe at least 10-20%, and you got to tie that just like you would at church. Like, seriously, you have to do, you must prepare for a rainy day, because it's never going to be sunny forever. And the people that get body slammed financially, the people that end up struggling and broke and can't pay for nothing, are people where if you look back, the question is, well, when you had money, what did you do with that money? What was your first thought with that money? Was your first thought to go and buy a new iPhone? Was your first thought to go buy a new pair of shoes? Or was your first thought to say, okay, let me take a little piece off and throw that in my stock portfolio so that I can have this stack of resources that can protect me in a rainy day? That is really, really important. And also, if you love your children, you'll do this for them. You will start investing for them while they're very, very little, even though small amounts of money. If you go to theallblackagenda.com, I have my $5 a day investing plan. If you do the $5 a day investing plan for your child and you invest consistently in a very passive, simple way, no classes required, no study required, no financial expertise required. Just put it in something like an S&P 500 index fund, which is called a spider. It's an S&P 500 ETF, which gives you a little. You own a little bit of the top 500 companies in America. So you literally own America. You're no longer oppressed by America in the same way because you own a piece of America. When America gets rich, you'll get rich. So you do that consistently. From the time the child is born. By the time that child is 30 years old, that child has over $250,000 in liquid cash they can access in case of emergency. That is a complete game changer for them. That means that they're not going to get stuck with student loans that they can't ever repay and bad credit. They're going to be a homeowner instead of giving all their money to a landlord and buying houses for their landlord. That means that if they want to quit their job and start a business, they can not only quit the job and be financially secure, but they have enough cash to then play offense and actually make an investment to build their business, right? So what you've done is you haven't just changed their financial situation, you changed their life. You've moved them from slavery to freedom. The reason that you're enslaved, slavery is when somebody's controlling what you're allowed to do. So the reason that you felt slavery was because you were not financially secure. A financially insecure person in America has to become a slave in order to survive. That's literally it. Like literally, you have to become a slave to that company. You're buying a house for your landlord because you can't afford to make a down payment on your own house. I own property. And I can just tell you straight up, point blank, period, that the amount of money that one of our tenants pays is about this much, and the amount of the mortgage is that much. So every month, it's the stupidest thing in the world. But I said, this stupid system, I'll make sure it works in our favor so that my family's good. The amount of money she pays every month is higher than the amount that we pay for the damn mortgage, and we get to own the damn house. So how fair is that she's paying the mortgage on the house for us? But we didn't make the rules. We just followed the rules. So if you ask me, would I rather be the one paying the mortgage and not getting the benefit, or would I rather be the one who's not paying the mortgage and getting all the benefits? Well, I'm going to take option B. I'm going to make that choice. So with your children, by investing that little $5 a day for them, again, you can't even buy a Popeye's chicken value meal for $5. What you've done is you're putting them in a position where they're able to control the narrative and put themselves in the power position as opposed to the victim position. Don't choose to make your child a victim. Make sure that they are financially secure. Don't leave them ass out the way your parents or grandparents might have left you because they don't want to talk about money, don't want to think about money or whatever, or think black people are supposed to be poor. Do something different for them, and that's going to make all the difference for that child. Okay. So anyway, let me read the next question, and we can move forward. Next question here. I'm reading the questions you got submitted in advance. If you want to submit your question in advance, I'll reiterate, go to theblackstockmarketprogram.com. Go to the top of the curriculum section at theblackstockmarketprogram.com. And at the top of the curriculum section, there's a link that says submit your question to Dr. Watkins. I will answer your question, and I will use your name, and I will answer it as clear as I can. All right. So Thomas Staples says, I'm interested in joining your weekly panel discussions. Can I apply or screen to test to show what I can do, contributing topics about hip-hop culture, et cetera, et cetera? Okay. All right. So it looks like his podcast is the TMF podcast, the TMFpodcast.com. So support the brother, the TMFpodcast.com. So Thomas, here's what you do. If you want to, and this is really true for anybody, what we do is, you guys know, we don't just have the Black Business School. We actually pretty much have a media outlet. And the reason we have to do that is because Black people must own our own media so that we don't have to deal with white people saying things about us that are not true, right? If you have your own media, then you control your own narrative. You have your own schools. You can educate your own kids. You have your own businesses. You create your own jobs. That's how you get away from racism and white supremacy. Ain't no white man walking in my house oppressing me, telling me what to do on a daily basis, because I just stay away from all of that. The best way to overcome a racist system is to get out of the system. That's the answer. Now, with that said, so with the media outlet, what we do is we bring in lots and lots of Black experts and Black people that have, great things to say. They can say it in a way that's interesting to other people, and I give them a shot. People like Vicky Dillard, you might have heard of her. She's probably the most famous woman in the Nation of Islam worldwide right now, and God bless her, because she's really talented. She's a wonderful person to deal with, and we do business and form partnerships, and there's a lot of other people out there. And so if you're interested in doing any of that, feel free to write this email down. It's producer@flynubianmedia.com. 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 Somebody type that in so that other people can see it, because I said it 3 times. I'm not going to say it anymore. But Taryn is the producer, and if you send her maybe a video link, a clip, maybe a bio too, or something to let her know what your background is, then she can get you on the platform. My goal is to share our platform with other people. We've worked very, very hard, spent a lot of money and a lot of time building a platform that reaches about 1 million Black people a week. We have about 1 million subscribers if you add up our different YouTube channels. And the reason we do this is because my battle is white supremacy. I want to battle white supremacy with Black excellence and Black power. And so that battle means that I wasn't, raised in a household where we sit around and complain about what white people are doing to us. I don't know about that mentality. I don't see any progress in that. I'm a mathematician, and a mathematician is supposed to solve problems. So my solution to the problem was, I said, okay, where are the areas that white people are kicking us in the butt the most? The main areas have to do with economics. They control your money. That's why they tell you what to do. And if you get out of line, then they'll take away your money. What are some other areas? Well, they educate your children, which means they feed them a bunch of white supremacist nonsense from the time that they're born, which means that you should probably be educating your own children. And then the third area would be media. They put crazy stuff on media. They have Black people looking stupid, looking ignorant, looking ridiculous. They take the most ignorant rapper in America and make him the most famous guy in America. Next thing you know, your little boys are imitating some of these idiots who are going around making babies with women, making babies that they're not taking care of, going around, and passing STDs in the process, getting hooked on drugs, rapping about how much they love getting hooked on drugs, staying drunk, high, all these crazy things, like committing criminal acts that are going to get them sent to prison. They're basically giving blueprints. They're promoting poison, basically, and maybe, I don't know if everybody sees it the way I see it or understands what I'm saying, but if you listen to some of the media that's out there on Black people and what's being fed, particularly to the Black men, there's no way a man can live that way and have a good life. Like, there's no way you can live a good life when you got 8 babies mamas. There's no way you can live a good life when you are high and drunk all the time. You're going to get locked up. You're going to be a dope addict. Your kids are going to hate you. You're going to lose all your money, and you're going to end up in jail, right? There's no way you can have a good life if you're making it rain every time you get $1 in your pocket and you're giving your money right back to white people. That's going to make you look stupid, right? So ultimately, long story short, is that our mission is bigger than just the financial literacy piece. Like, we'll talk about economics all day. The Black Business School, that's what I do. My PhD's in finance, but because my background's in business, I understand how these engines work. That's the point. White supremacy is a system. It is a capitalist systematic engine that is designed to allow white people to have all the power and for Black people to be in the oppressed category. But the thing about it is that there is no door blocking you from escaping some of these processes. You just have to think about it. You got to listen. You got to do something different. You have to think about systems. So if I wanted to raise a child that was, well, actually I do. I have nieces, nephews, grandkids, whatever, right? And so in my view, when my children in my house come to me and they say, well, how do I escape white supremacy? How do I deal with all this racism that's out here? Well, I say, okay, well, all right, well, let's see. What are the areas that you got to deal with? Okay, police, you're worried about police, da, da, da. Okay, yeah, well, well, let's try to stay away from the cops. But you know, in my life, in my view, I only talk to a cop about once every 3 years. Honestly, I don't really see that many police officers. Even when I was a young black man, I would see them, but it wasn't like every single day there was a cop that was trying to kill me, right? There's less than 50 unarmed black men per year across the whole United States. Out of millions and millions of people, less than 50 are killed by, by a cop in an unarmed capacity every year. So it doesn't mean it's not out there. It just means that it's not what people tell you that it is. Your bigger concern is that every day you get up and you go to work, and in order for you to feed your children, you got to go and kiss a white man's ass. And and he's disrespectful. He disrespects you because you're weak. He disrespects you because you have nothing. He disrespects you because you don't have the ability to stand up and tell him no, right? So how do you fix that? Well, guess what? When my girls go out and they go looking for jobs or whatever, well, we've got a financial base. They're going to be financially literate. I told them, I said, look, if you don't want a man, any man, whether you're working with that man or in a relationship with that man controlling your life, get your money right. Get your money right. The lowest net worth in America actually is a single black mother. Did y'all know that? That mothers who have kids with men who are garbage, and don't have financial literacy, have the lowest net worth in America. Like they're just really in a horrible trap. And then the men who make kids and that they can't afford have are right there with them, right? So basically, it's like really just understanding the game. So we talk about the game, and I say, okay, just make sure your money's right. Make sure you understand economics and how to go make money, and then you'll be able to walk away from situations that don't make you comfortable anymore, right? So, with the Black Business School, we're doing a few things. One, we want to control education. We educate ourselves in a way that is solely and completely focused on what black people need to build black empires, to build stronger black families, and to be financially secure. Two, we control our own media, we control our own narratives. When I do content, any sort of video content, I can reach hundreds of thousands of people, and I don't have to ask for anybody's permission. That was all by design. Thirdly, we we make our money independently. We don't take money from the government. We don't take money from corporations, because the government is always going to, whenever they write you a check, they're always going to expect something in return for that. They're always going to expect some sort of allegiance or loyalty, or there are always going to be boundaries around what you can do. So if you build a school and it's a government school, then they're going to tell you, okay, you must teach certain things about LGBT, or you must teach, your curriculum must be structured a certain way, right? And so we don't take money from the government for that reason. But also corporations are very fickle too. If you are radically challenging, some of the white supremacy that exists in America, well, there's a point where they're going to not be comfortable with what you're doing, and they're going to walk away, and they're going to take away your financial support. So you have to be very strategic about it. And I know that obviously I have an advantage because I think about these things all the time, but I explain these things to you so you can understand that if you want your kids to be empowered, you got to give them a custom-made education. Like Black liberation is not taught. It's not going to be a stand. It doesn't come with the standard package. Like the standard educational package is built for slavery. The standard educational package is not built for freedom and liberation. You must own your own businesses. You must educate your own. You must control your own media. That is an absolute necessity for you to actually have a chance to be free. Okay, so let me grab the next question. The next question is from Yorley Boyd. He says, I have a friend that's been doing well in real estate with a few multifamily properties, duplexes. What advice would you give if I choose to work with them to build in that area as well? Well, if your friend is doing well, maybe talk to your friend a lot. Maybe you could have like a little real estate group. That groups are always fun. Just get together with a group of people that are similar to you, that think like you, and want to achieve progress like you. That's what's going to help you achieve progress. You don't want to spend all your time around people that are lazy and don't want to go anywhere, because you're going to be just like them. They're going to make you just like them. So don't try to elevate people out of the mud if they don't want to get out of the mud. You need to stay with people that want to go to the sun. You want to hang with the sun people, not the mud people. Not to say that you should look down on people, but there's some people who just don't want to do better. There's some people who just, I don't know if they're complacent where they are, or just lazy, or don't believe in themselves. I don't know what it is, but whatever it is, like, God bless them. But get around people that are going to help you get better. And really, if you get a chance to spend time in a space around people that know how to just go make money and really know how to make money the right way, like they can actually see an opportunity. And you remember I told you poor is passing over opportunities repeatedly. Well, rich, I don't have an acronym for it, but rich people that tend to just know how to make money, they are the ones who see the opportunities that poor people pass up. So, two people that have different mindsets will see the same situation and come to completely different conclusions. One person says, well, how much am I going to get paid? What's my paycheck going to be? Right. And they can't see past the paycheck. Nobody ever taught them that the real money is past the paycheck, but they're just looking at the paycheck. How much money am I going to make per hour? Right. But then you got the other person who's like, I'll work for free because I actually think that if I own a piece of that, I'm actually going to get like the real money. Right. So the ownership, there's very few people that are wealthy, that are millionaires, that are doing really well, who got that way with a job. Like all jobs do is work you to death and work you into an early grave. All jobs do is frustrate you, piss you off, make you mad, make you feel constrained. If you ever want to have power and freedom and liberation, get in a space where you can learn how to create businesses and LLCs. That's the freest I've ever felt as a black man. And believe me, I had some high paying jobs. When I was at Syracuse University, my first year, I was the highest paid assistant or associate professor on the entire campus. I wasn't even an associate yet. I was making more money than the people who were above me on the promotional scale. To be an associate, you got to spend 7 years there and get what they call tenure, and then you become an associate. I made more money than all the associates and the assistants on that campus. So I'm up here making, I'm pulling $11,000 a month, and it was nice. It was a great job for sure, but that's nothing compared to what I found when I learned how to create my own and when I learned how to invest. I started seeing what wealthy people are able to do. People that really have wealth are able to make more money in a week than many of us make in a year, and they can do it without working, without even going to work. Like that sounds impossible. Like it's like, what? I don't get that. Right? Because your whole life you were raised on these ideas that say, well, if you work hard, if you want something, you gotta work hard, you gotta work hard. Yeah, you gotta work hard. But you work hard to get to the point where you don't have to work hard anymore. When I was in college and I was studying all the time, and everybody thought I was crazy because I was in the library at 10 o'clock 10 o'clock at night on the Saturday when everybody else is at the step show and at the party. They were like, why do you work so hard? Why do you work so hard? I said, I work hard. I'm gonna work hard now for about 4 or 5 years, so I don't have to work hard for the rest of my life. And if you're lazy now for 4 or 5 years, then you're gonna have to work your ass off until you're 70. I don't want to do that, right? So smart people are kind of the ones that can sort of position themselves early and make those sacrifices early, so that later on they get a chance to do things other people can't do. All right, so let me read the next question. Ria says, Ria Li Shu Ling. I don't know if that's an Asian name or not, but welcome, sister. We do not discriminate in the Black Business School. You do not have to be black to be here, but just know that the black agenda is our only agenda. So if you are not black and you want to support the black community, then you are welcome to do that. Just no different from a black person going to Harvard. I know Harvard was not built for black people. That's why they got those racist policies, right? But they'll let black people in to support the mission of Harvard. Well, you can come to Black Business School if you're not black, but just know that what our mission is not going to change. What are your thoughts on using angel investing platforms like Start Engine, WeFunder, and real estate REIT platforms, Diversify Fund and Fundrise to diversify our financial investments? I think that's a great idea. I mean, if you look into things like Fundrise and WeFunder and all that, that's really a whole revolution of investing possibilities. Those I like those sites, and I also speaking on real estate investment trust. I like things like that because I always wanted to invest in real estate. I just didn't want to be a landlord. Being a landlord, I don't like tons of paperwork. I don't like the idea of having somebody call me and ask me to come get the toilet changed at 2 o'clock in the morning. um, I don't like the idea of dealing with the liability of having, a tenant who might slip and fall and then sue you for everything because somehow them slipping and falling is your fault. Um, so, remember this: don't just do stuff because everybody else is doing it. Owning real estate is important, and I own some real estate. But let me just tell you, when I bought my property, we got a property manager, and I made it real clear, like, look, I got the money, but I don't even want to go to the meetings with the lawyers to even set up the deal. Like I don't even want to do the signing, let alone all this other administrative stuff. So if you can get me a property management company that basically says we'll do everything else, you just cut the check, then that works for me. That was the model that I selected, because I don't want to be deeply embedded in real estate and doing real estate all day. That's just not fun for me. But I see the value in it. There's value in diversification, etc. Now, if I really wanted to keep it um, extra simple, if I really wanted to get in there and give me 1 second here. Hold on. Okay. Now, if I really wanted to make it extra even simpler than that, you know what I would do? I would open up my Robinhood app and I would type in REIT, search for REIT. So in fact, if you got your Robinhood app or maybe some other app, and you could search for different assets to invest in, search for the letters REIT. Let's see what comes up, which stands for Real Estate Investment Trust. Let's see what we got here. All right. So let's see. We've got the Vanguard U.S. REIT Fund, the Apartment Income Fund, um, the Sabra Healthcare REIT, Apple Hospitality REIT, Schwab U.S. REIT ETF, Armor Residential REIT, Care Trust REIT, iShares Global REIT. I could keep going, but I'm not going to. Why is that important? Well, because you don't have to actually own property to be invested in real estate. The reason that you invest in real estate is because you want to do one basic thing. Here's why you invest, pretty much. You want to put money somewhere and have that money. Bye, babe. Love you. You want to put that money somewhere and have that money grow into more money, right? Like if I told you, like, tell me, give me a yes or no in the chat. What if I told you I got this investment for you? You can put $1,000 in. It'll be $3,000 in 5 years. Yes or no? Would you take that investment or not? Right. That's just like just like buying a house for 100K. It's going to be worth 300K in 5 years. What do y'all think? Give me a yes or no. Do you think that'd be a good deal? Would you be interested? Would you jump all over that? Would you be like, yeah, let's do it. Let's do it. Okay, good. So let me point out to you. Let's take a look. Let's say that instead of buying the house and going through all that stuff of owning real estate, let's say that instead we invested in the Vanguard U.S. REIT Fund, which let me describe this to you. It says that V&Q tracks a market cap weighted index of companies involved in the ownership and operation of real estate in the United States. So basically, what they're saying is that we take your money and we invest in companies that own real estate. So you don't own the real estate directly, but you do kind of own it indirectly because the shareholders own the assets, right? So you just own a little piece of it, and you're combined with all these thousands of other people that you don't even know, and all of y'all just formed a big investment club, and all your money is being used to go buy office buildings and apartment complexes and all that. And now, do you know exactly where this money's going? You don't know exactly, but it's Vanguard. Vanguard is a really respected company that has a huge, wonderfully good reputation of making tons of money for people. So you pop your money in there with all the other investors, and the market cap is $35 billion. So you formed a $35 billion investment club with other people, and all you're doing is you're buying houses and real estate all over the world. And you can do this for like $10. You can literally buy. Let me see. I'm not sure if you could buy shares for $10. Oh, sorry. The shares are $91, but I think you can actually buy fractional shares, right? So here's the deal. So remember what I was saying earlier. That you put your money in, and it flips into something else. Well, if I went into the Alps ETF Trust fund. Let's see what has it done over the last. Okay, it's not an old fund. So let me look at the next one here. Let me see what we got here. Let me look at the performance. Okay, so this one didn't do 300% in 5 years, but in 5 years it's done 116% ROI. So that means that if you put in $100, that $100 would be 100. It would have grown by 116%, which would be about $216, right? On that investment, or $100,000 becomes $216,000. So the way to compare that would be if you bought a house for 100K and the house was worth 216K 5 years from now. would you be happy with that? Like, would you feel like that was a good move? That was a good thing. You made good money. You brag about that at, at social events, or maybe when you're sitting at, you have a party at your house and your friends are like, what'd you invest in? Oh, I invested in this fund. Or I put 100K in and now it's worth 216K. Or I bought this house for 100K and now it's worth 216K. Would that make you feel good? Give me a yes or no. Give me a yes or no. Okay, good. I'm seeing my yeses. Thank you. I was waiting for that answer. I want to consciously ask you that because you can do all that without having to actually go buy a house. You could do all that without actually having to go out and buy the real estate, right? And also, more importantly, you could do that without having to invest all the time it takes and all the energy and expertise you might have to accumulate to manage property, right? Dealing with tenants, evicting people, just all these other crazy things that can happen. So I'm not saying don't do it. I'm not saying don't get into real estate. I'm saying that there's a lot of ways to skin that cat, and also don't do stuff you're not comfortable with. Like if you're just not comfortable, thinking about being a property owner, like just think about evictions alone. Like, God, that just sounds like that just sounds so unfun to have to go chase somebody down and fight somebody who might try to shoot you because you're trying to put them out of the house, or make you feel like you're a terrible person because they got kids and you're telling them they got to leave because they haven't paid the rent in 6 months. But you got to make that move, because if you don't, you're going to go broke. Right. So I'm not telling you what to do. I'm just telling you to look at all your options. And there's a million ways to be invested in real estate without actually buying real estate. There's a million ways to be invested in cannabis without buying cannabis. I've made a ton of money in cannabis, and I don't know nothing about growing no weed, nothing. I just bought some stock in people. I invested in people that do know about how to grow weed, and they made me a lot of money, and they gave me my money back, and I said, thank you very much. You see, so that's the fly way to make money. You remember that song? I met this rapper when I went to my friend's Willie D from the Ghetto Boys, right? Willie's actually going to be in our wedding in July. And so I went to Willie D's event. He had a little roast, and a lot of famous people were there. Chris, not, what was it? D.L. Hughley and Mike Epps and a few other people. So I met Willie D's thing, and I'm just standing there, just holding a little drink or something like Pepsi or something, and I'm just waiting for the thing to start. And this guy comes up. He's like, "Hey, Dr. Boyce, how you doing, man?" I said, "Hey, what's going on, brother?" And I was like, "What do you do?" And he said, "Oh, I used to be a rapper." I said, "Really? Tell me, like what did you do?" And he said, "Yeah, my name, I think it was Lil Troy." And he said, and I said, "Really?" I said, "Have I heard him in your songs?" He said, "Yeah, remember that song? Wanna be a baller, shot caller, 20-inch blades on the Empire." I was like, "Oh man, that's cool. That's one of my favorite songs. I still listen to that song." Right. And there was a part in the song where he said something about making money the flyway. Y'all remember that? And anyway, so if you're not old enough to remember, you got to go hear it. It's a good song. But the thing was, it's like I remember listening to that song and thinking, like, what does that mean, making money the flyway? Like, what is that? Like, are we talking about slanging dope or what? Well, I got a new definition for making money the flyway. To me, making money the flyway is when you learn how to make money without having to do all this crazy work and drive yourself crazy, right? The number one goal, the holy grail you want to accomplish, in addition to financial literacy and basic economic intelligence on like the three pillars of wealth, which stock investing, real estate investing, entrepreneurship. Those are the three ways that rich people make money: stocks, real estate, owning businesses. Those are the three things your children need to know about money. Like literally, have them study those three areas in detail. They will never have financial problems, or better yet, they won't be in this weird struggle that so many people are in. But in addition to that, the holy grail is giving your children like a capital base. A capital base, all that means is that you have a bunch of money that you can do things with, you can make moves with. It's no different from like if a person doesn't want to starve to death and you leave them like 100 apple trees. Will that person ever starve if somebody left them 100 apple trees? Are they going to go hungry? No, they're not. In fact, let's say they have a farm and they got apple trees. They've got they got tomato seeds. They've got cows and pigs and chickens. Will that person ever starve? No, they will never starve. They will never starve because they've got a base. They've got something that provides for them, right? The reason that you become slaves as Black people in this capitalist system is because you don't have a base. Everybody, the Jewish community builds a base for their children when they're young. The child grows up, he becomes an adult, he goes out into the world. He doesn't just get sent off to college and all that. he also he might, his parents maybe own an apartment building or something that they give to him and they say this is your base. Or they might own some stocks and they'll say, here in my will, or here's this trust that has some stocks in it that form your base. This means that if you ever get in financial trouble, you can go sell a little stock and get your 10,000. That's going to get you out of that situation. Or if you ever, need extra cash flow, you're going to make enough money. Hold on, give me a second. You're going to make enough money from your tenants in your apartment building to pay all your bills and then some, right? So ultimately what you want to do is say to yourself, what is my base and how do I build a base and what is my child's base? Now, if you don't have a base, your base is going to be small in the very beginning. But the way bases get built, the way a capital base gets built is through little tiny contributions over a long period of time, particularly in an asset that's going to grow, right? So basically, if you are consistently putting money towards stocks, even if you're randomly buying a new stock every week, like literally the same amount of money you might spend going to the grocery store, the money you might burn through buying, I don't know, buying weed or buying shoes or going out to eat. Like if you consistently are putting that money into your capital base, and it's put into assets that are going to grow, what's going to happen is your base is going to get bigger and bigger and bigger. And then eventually you're going to feel financially secure because you're going to say, okay, I've got $15,000 in stock that will protect me in a rainy day. I can go, if I have a problem, I can go sell stock. I can maybe sell options on my stock, which, again, stockoptionsmasterclass.com. That's the masterclass I put together on stock options and all that. If you want to go take a look, it's stockoptionsmasterclass.com. Feel free to go take a look at that. But you have to have that base like that. That is the most essential thing to give a black child. Nothing else matters more than that. Seriously. If I had a choice between being a college educated person with no capital base versus a non-college educated person with a solid capital base that was built over a generation, built since I was a baby, I would much rather be in the second category. Because what happens is that the college graduates, where you guys get in trouble is you get kind of a little bit of a base. You have what is called human capital. You have this education which allows you to generate more money through this thing called your brain and your skill that you have and your labor. The problem, though, with that route is that you are the asset. So you have to go through life selling yourself into slavery and working yourself to death in order to generate income from your primary asset, which is your brain. Your brain is not an economic entity only, it is a biological entity, meaning that it is eroding capital. Like the more you work, the longer you work, you get tired, you get old, you get 60, 70 years old, you can't do it the way you used to, right? So a lot of people work themselves to death because the only capital base they have is their labor and their skill, right? So what you do is, or you think about a really good example might be LeBron James as a basketball player. His number one source of capital in his life up until about 30 years old was his ability to play basketball. The fact that he was 6'8", 240 pounds, and could dunk a basketball was the number one source of revenue in his life. That was his number one capital base. That's why LeBron takes good care of his body, because he's protecting his capital base. He freezes his knees and all this other stuff to make sure his body stays as healthy as it can for as long as possible. But what happens is eventually his capital base will erode, and that's where his intelligence in investing comes into play, because the whole time LeBron is getting his income from his primary capital base, which is his body, he's diversifying into other capital bases that don't require physical labor anymore. He doesn't, LeBron is now, because he's taking his money, he's put it into movie projects. He's put his money into stocks like crazy. LeBron probably owns $100 million at least worth of stock. He's putting his money into real estate. He probably owns $50 to $100 million worth of real estate. He's putting money into businesses. He's bought into different businesses that he owns. So what's going to happen is, and similar to Shaquille O'Neal and Michael Jordan and others, when LeBron's primary capital base erodes playing basketball, he's not going to end up in the trap that a lot of black athletes end up in, where you've got this guy who's 50 years old trying to go back and do another prize fight because he doesn't have any capital base outside of his ability to box, right? That worked when you were 25. It doesn't work when you're 50. It makes you look kind of crazy when you're 50. Even my hero, Muhammad Ali, was in that trap. He hadn't developed any alternative capital bases. His only capital base was his brand and his ability to box. And you saw how that ended. That ended very badly for him with that brain damage, and he just kind of went out in a really terrible way. But LeBron, on the other hand, has diversified. So LeBron is now at a point where even if you cut off LeBron's legs, God forbid, I wouldn't want that to happen. I don't even want to put it in the universe. But let's say that his legs got amputated and he can't dribble basketball, can't play, can't walk, can't do anything. LeBron will still make about, at least I'm gonna guess, $50 to $100 million a year without working at all. Starts off poor, now he makes $50 million a year. Even when he doesn't dribble basketballs, even when he doesn't work, he doesn't have to go to a meeting, he doesn't have to do anything, right? So that's where you want to. And the thing is, so with LeBron, it's the 50 million mark. Your kids are probably not going to be LeBron, but your kids can be in a position where maybe you, again, if you start now and you do the $5 a day investing plan, I don't care how poor you are, you can afford to do this. You do the $5 a day investing plan. By the time your newborn is 30 years old, well, that newborn has a couple $100,000 to play with, and that means that newborn, if they're smart, they can then, at 25, 30 years old, instead of getting up and going to work and slaving for somebody every day, they are able to make money from, let's see, what would their life look like? One, they don't have student loans because you didn't have to borrow a bunch of money for them to go to school. So that's one burden that's gone. Two, they can make a down payment on a house, which means that they're an owner of the home. They're not renting a house from anybody. They're not buying a house for their landlord. They're buying a house for themselves. So every time they pay the mortgage every month, they're adding to their net worth, and the value of the house is growing every year. So they're getting money just by owning the house. The value, the house goes from 100,000 to 200,000. They make 100 grand just because they're living in the house. What else is happening in that child's life? They have stocks that they own, where they can maybe, sell options on the stock, or they're getting dividend income from the stocks. They probably own a business, and they have a business where they're doing something that they really love to do, not what they have to do, but something they love to do. The business is funded because they have a capital base, and they're generating lots of money from the business. And if you train them right, then maybe they have a small business that's making $80,000 a month, $100,000 a month, where they're making money that you don't make on a job. If you really want to give your kids a chance to really make that big money, like make money, like that insane money, teach them how to be entrepreneurs. I don't know. Most employees I know don't make more than $10,000 a month, maybe 15,000. Maybe like surgeons and stuff like that might make $15,000, $20,000 a month. The big money are like, I know women who do hair, literally, who sell hair care products, who clocked like, $400,000 last month, or who made, $2.4 million last year, or who make, $80,000 in a day when they have a special, right? So teach your kids that route as opposed to the old school route. And then the best part of it, though, is not the money. The best part is that you're free. You're not sitting around wondering, why you're being oppressed by white people, because there are no white people around oppressing you. They oppress you when you're weak. They oppress you when you come begging. They oppress you when you don't have any other options. Just like a pimp. Pimps don't pimp every woman. Pimps pimp the women with low self-esteem, who have no options, who can't stand up to them, who don't understand the system, who don't understand life, who don't have guidance, who don't have support. That's who the pimps target. They don't target women with strong self-esteem, who have strong fathers, who have options, who have resources, who have education. They pimp the women who are at the bottom of the barrel. So black people get pimped because many of us leave our kids at the bottom of the barrel, and they end up begging white people who hate your guts, who've enslaved you for hundreds of years. They end up begging them for an opportunity. Well, what do you think is going to happen when you're begging your enemy to feed you? It's not going to work out for you. Not only are they not going to feed you, but if they do feed you, they're going to feed you poison, and they're going to threaten to stop feeding you every time you get out of line. So keep that in mind. It's very important for you to understand. All right, so let me now I'm gonna rapid fire answer some of the questions. I had fun talking about that issue because I think it's very important, and I encourage you to think of it as much as you think about a religion, because it's that important. What are your thoughts on using Ameritrade or Acorn for the stock options program? I think Ameritrade can work. Acorns, not so much, but Ameritrade can work. Stock options masterclass.com. I think that's what you're talking about. Yeah. We used the examples I did, I use Robinhood, but you can use E-Trade, Ameritrade, stuff like that. But Acorns, not so much. Eric McGriff, when you receive your regular income, what percentage should be in savings? There is no set percentage. The higher the better, but 10% is a good number to start with. So you make $100, you put $10 in your rainy day fund, and maybe put it toward 10% towards savings, 10% toward stocks. But if you really want to build your capital base faster, the people that have done that faster are the ones who are very aggressive about it. It has to be important to you. Make it a top priority. Don't make it something that you just do with your extra money, because then it won't grow very fast. Let's see. I'm Polish, shiny new into stocks. Okay, I want to open a brokerage account with $100, and I heard the ETFs was something to get started in. You can set and forget. Yes, the best ETF I like is the S&P 500 ETF, which gives you ownership in the top companies in America. And that ticker symbol is SPDR. SPDR is called a spider. And I like the spider because it's well diversified. It's easy. You can set it and forget it. You can literally auto deposit a certain amount every week into a spider. And if that literally would be equivalent to doing the $5 a day investing plan. And then, if you just leave it alone and don't touch it and let it grow and keep putting that money in every week, then you're going to be wealthy in probably in less than 10 years. You'll be in a far better financial position than most people because you'll have extra cash. Most people can't even get $5,000 in if they have an emergency. They don't know what to do for that. But with this process, you would have maybe $25,000-$30,000 available, which right there would help you avoid a lot of financial crises that a lot of us have. A lot of our crises happen because we don't prepare. When you don't prepare, when you don't get ready, you're not going to be ready, right? So so seriously, so get ready, and then you won't have to worry about being ready when something goes wrong. Uh, let's see, Malachi, or is it Maika Velasquez? That was part of my question. I want to start doing vlogs. So it says you use Zoom, but what camera mic do you recommend? I use this mic, which today isn't even working, but it's a good mic. It's Audio Technica. Audio Technica. It didn't cost me much. I mean, I think if you go on Amazon, you can find good mics for almost nothing. Camera. I'm just using the camera that's right in my laptop. I have an HP Spectre, and I use the cameras in my laptop. You don't have to be fancy with it. The idea, but then again, I'm a believer in quality over, substance over flash. So I'm sure there are people that have flashier sets and stuff like that, but I'm not looking to do that. I just want to come in and talk to you and share information with you. And I'd rather us talk about the information than worry about the flash, right? So I tend to draw a specific demographic in that way. For people that like flash, they just go somewhere else, right? But I like it that way. You don't want everybody following you, because some people, they're not going to get you, and that's okay. All right. So let's see. Porsche. I'm currently an American living in Nigeria. I am just starting out, and I own only 2 stocks, and they aren't great ones. I'm enrolled in your program, but I want to know how much I should expect to invest every month on a 20K salary. I would say to think about it like, maybe pick a percentage of your income and just, like you tied to the church, right? No matter what your income is, they tell you 10%, for the church and stuff like that. Why not just do 10%, right? Just take the 10% off, and you got to take it out first. Take it out first. Don't spend first and invest what's left. Invest first and spend what's left. Investing is how you secure your future. Your investments are what's going to protect you. So you got to protect yourself first before you go out and make the world happy. Valerie, how do you purchase Bitcoin? Scan through Instagram. Oh yeah, don't go through an Instagram page. You can go to a lot of these exchanges. You can go to maybe Coinbase. A lot of people use Coinbase. You can use Bittrex. That's another one. There's other exchanges out there. I can't think of them all. If you want to know what crypto I own, you can go to drboycrypto.com. That's drboycrypto.com. I have a screenshot of all the crypto that I bought, and there's a ton of crypto exchanges out here. Don't buy it. Like if you get a message from somebody saying I can help you get crypto or buy crypto, don't respond to that. And in fact, there's I've seen like fake Facebook page. This is what happens. Like when you have a bigger profile, people create fake pages and they pretend to be you. So I've heard of people getting messages from me saying, hey bro, why don't you buy this crypto from me or whatever. Like I'm not that guy, so please don't fall for that. I hope that doesn't happen to anybody in here. Carla, do you know about subject to real estate method? Subject to real estate method. I don't know what that is. If so, how do you feel about these investments? How would one get started. I don't know anything about subject to real estate. I apologize. I haven't heard much about it. Dr. Boyce, have you heard of the Motley Fool? Yes. I love the Motley Fool. The Fool, I think it's Fool.com or the Fool.com. I subscribe to Motley Fool. They give really good investment advice. A software company called Snowflake, largest IPO in history. Yeah, I'm not a big believer in popular IPOs. They tend to be overvalued, but I'm not saying this is true with Snowflake. I'm just saying that tends to be the case. Charles Taylor, CEO of Fresno, California, in 103. Okay. All right, cool. Nice to see you, Charles. Good to see you, brother. LaRon Barber, if someone has money in 401ks, it's best to take control of those investment funds. If so, what's the best way to do that? Is it best to take control? I think it's a matter of finding out if they will allow you to do that. And if they do, then put in some sort of diversified portfolio is really all you got to do. I mean, it's not really rocket science. So if you just diversify and buy and hold, you're probably going to be okay. Investment advisors can add some value